righty, good morning, everybody. It is Wednesday, March 12th, 2025. So if you recall yesterday's video where we were talking about expecting lower lows and why we were expecting lower lows, so I do want to show you what transpired here yesterday and the exact pattern. Actually, before we even start that, I do want to just mention we just had the CPI news release, right at 8:30 Eastern. And they came, where did they pop to? I don't know. It seems like almost every time we have one of these big pops in from a news release, it goes right to our roadmap level. Like it could go 40 points one direction and just come right to it and reject right off of it. And then it comes down and finds the support right off some major roadmap level below, right? So that's exactly what happened here just a couple minutes ago. So not only was it a tag of the roadmap level at 56.72 half, but it was a textbook bearish divergence on the test of the level. So this was happening at light speed because the market, the news was released, or that 8:30 minute hit, and this thing popped right up, pulled back, pushed into it, and pulled back from there in a matter of 10, 15, 20 seconds. So you did have an opportunity to kind of act and put it on, but it did happen here within 10 seconds, 20 seconds, it was done with. So you had to be fast. But I do just want to point out, since we just started, we came right up. Now, what is this level? Before we get into the other lesson, let's start off with this. Where did they push to and get a major rejection just a couple minutes ago? Well, if you zoom out and you look up to where the market was just a couple of days back on March 7th, what was the major low on March 7th? Just sitting there, I would argue, kind of naked, right? We broke through that area and we never came back. I mean, we came back yesterday or in the overnight session here, and we came all the way back, but look at that. I mean, this is exactly why I teach this stuff. If you have a swing like that, sitting there naked, it's right at a roadmap level, which we know has edge and is the reason why that came down and bounced from there a couple days ago. And we cut through that area and it's sitting there naked, and we never came back, at least from a 60-minute perspective, and came up to tag it. There's most likely going to be a reaction there, whether it's going to be a little 2.5 point pullback before they pop through the level, or it's going to be something like this where we've now gotten a 30-point pullback from, right? So they came right down to the next roadmap level here at 36, and now we're trying to bounce again, right? So that was the very level they just pushed to a couple minutes ago after the CPI news release and pulled back from. And when they came up into that area, we had this textbook 512 divergence, something I love to trade. So there was a good opportunity there. And now you can see, as we're getting closer to the open here, what has been happening. The market has been stepping down these roadmap levels, right? There's the high the day before. There's that next major eye level. Here's that next major SNR, right? And even bounced off the 200 here. But as you can see, if you did try a long from the 200, it couldn't get through the FMA, which again, I teach you, if you're in a trade and it can't even get through the FMA and starts to reject and come back with a bearish divergence off the swing, you better prepare for that to come right back to your entry or potentially just push to lower lows. So again, nice little scalp opportunity for 3-4 points, and then hopefully you took profit at the FMA with your first part of your position, and it came back, right? So again, stepping down these areas, there's the parry off the 200, but then the rejection off the FMA, and there was this short opportunity, fading the back end of the next roadmap level and the back end of FMA with bearish divergence. So a couple good shorts here ever since that little pullback as well. So some good stuff happening here just in the last couple minutes. Again, just showing you, I'm not cherry picking. I'm just showing you exactly what's happening here, nearly minute by minute. So let's go and talk about where we bounced yesterday and why. Well, we already talked about what I expected. Now I want to show you what actually happened. So again, this is just, I mean, it just happens nearly day in, day out. So give me a second. Okay. So yesterday we came into the market and we did our pre-market broadcast, and I did share that. That's yesterday's video. And we were talking about seeing the market come up, and let's get to right where the 9 a.m. candle is. So this is the candle that had closed when we started the broadcast. And I told you guys that nothing was lining up down here for the bulls. Or actually, we were talking about the day before. We were talking about not seeing much lining up for the bulls, and that it made sense because none of the higher time frames gave me clues for the bulls for the market to come down to lower lows. And actually, I'm sorry, it was down here. So we had a very similar looking pattern to the day or two before that as well. So I'm getting mixed up here. Excuse me. So we came down, and I told you this was sitting here. We did bounce off a really good area of support there. There was some stuff in, if you were to zoom all the way back to months and years ago, lots of stuff sitting right over there that made sense for a stronger support. So it made sense to bounce, but we didn't have any signals there. And so what did I tell you in yesterday's lesson? I told you when we see this type of scenario start to happen, typically we see them come back and they test the low. And typically we get either a double bottom or we get a peak below, and then it bounces out. And then when that peak below happens, we get a bullish signal. That's exactly what we talked about. Now, when we came into the open yesterday, our bias not only was for a retest of the low of the overnight session there, or a push below to bounce if we got our bullish pattern, but we also had some clues for the bears from the overnight high. So before the market opened yesterday, in our pre-market planning session, which doesn't get broadcasted, we do offer free access on Thursdays and Fridays, by the way, for anyone who's listening. So if you're in the public and you want to just jump in Thursdays and Fridays, come into our Discord and you will get the broadcast and you'll be with us for our planning session. But what we saw from the highs was a clear 4-hour potential and an hourly bearish signal from the overnight high as we came into the open. So I told everyone, all the members, that we had clues for the bears with no clues for the bulls. So when we came into the open yesterday, the market sold off. And it was a sell-off from, I guess the market opened closer over here, from about 56, let's just call it 10 to 56.20, all the way down almost to 55.20. So we got a nearly 100-point pullback. If you were actually shorting from our roadmap level at 47, it was more than 100 points to the low of the day. So there was a lot of opportunity in here to get short yesterday. But again, I digress, because the main reason I wanted to bring this up was to show you that the very pattern I was anticipating before the market opened is the very pattern that we got. So again, pushing, we were supposed to come back to test this low, potentially get a slightly lower low to get the bullish pattern, and then bounce from there. And so now this is what you can see. This is right now on the right-hand side of our chart. This is current market time. And you can see yesterday they sold off, as we expected, with our bearish signals from the overnight high. Came down to a new lower low. We got the bullish pattern. See that beautiful bullish divergence that was forming as that low was setting in yesterday? And then the pop out. Now, it wasn't just the hourly, right? It was also our 4-hour chart. And on our 4-hour, it was the same story. We had no clear bullish signal from the overnight low yesterday. And we had that potential bearishness from the overnight high. The market sold off. We got the lower low with the pattern, the reversal pattern for the bulls. And now here we are breaking the previous swing high coming into this morning's open, albeit rejecting right off the major roadmap level, which was that low from March 7th, right? Again, a naked swing becomes now the overnight high, which could be the high of the day. They could now start pulling back from here for all we know, right? So that was kind of the lesson here, just to kind of show you that you can anticipate these types of patterns and setups once you become familiar with the system. I've put this together and I've been using it and refining it for years and years. So for me, it's second nature, but it is possible to look at this stuff and start to see certain patterns either developing or not developing, and being able to anticipate a potential pattern that might be forming, right? And I do it almost every day for years now. I've been doing it right before the market does something. We talk about the potential, seeing it starting to set up, and then it happens. So this is just another example, just honestly, just another day here at the S&P Roadmap. We do this stuff hour by hour, and we find these rotations, we anticipate them, and then we find perfect opportunities to trade them. So just to finish off this lesson, let's look at, if we were to trade in the short direction yesterday, some opportunities we had within the first couple, let's just say the first hour of the open. So let's go back to yesterday on our short time frames, where again, this is where I like to find entries on the chart for my bias, right? And we already qualified bias. Bias is going to change, especially if you're trading intraday. But let's look. So we came into the open. They had rejected right off major roadmap level. It looks so similar to the day before that and this morning almost. We come right up to the major roadmap level. We have bearish clues. We start to sell off. So I want to show you some of the opportunities that happened yesterday, close out of the open. So first thing that I see here that looked pretty sexy to me is the tag of the 200. So I do need to point out that here is an example of basically the first tag of the 200 after the crossover. It wasn't exactly that, because we got the crossover here and they did come in and tag it. So technically it wasn't the first test. It was invergent at that point. But there was some clues for a bearish pullback from here, because we had this extreme bearish divergence. So, hey, I'm trying to be full frontal with you here that these patterns don't always transpire exactly the way we want them to. And this would have probably been close to the most aggressive thing you could have done. The most aggressive thing would have been a short off the back end of the FMA here, just out of the open. And you would have made a little bit of money, but they did come back, right? So that would have been maybe the first thing, and it didn't work. But that's okay, because just within a couple seconds of that, we get the test of the VWAP, bearish divergence for the first pullback. So there was that first opportunity. And more sexy to me, actually, was this slightly higher swing. And there's the pattern, my friends, on a very short time frame, on a 512 tick. That peak into the level, the big bearish divergence, and the pullback. So right here, even though that didn't work out, short in the FMA might have worked out of the open, and short in the back end of the roadmap level here, and then shorting the VWAP would have worked, and shorting the first major roadmap level. So we've got a couple opportunities there. And then the market continues to kind of push higher. We put in a higher low for the morning at that point, pushed a little higher. There was another short opportunity from there, but then they inched up and came right to the HOPL, Holy Orange Power Level, where you then got a beautiful, beautiful short opportunity here. So I didn't trade yesterday for whatever reason this week. Yesterday and Monday were just not my kind of mornings. So I'm talking mentally, being in the game and having other distractions going on outside of trading. So I didn't trade yesterday, didn't trade the day before, but that right there would have been a moneymaker, right? Bearish divergence, Holy Orange Power Level, and the close of the day before. They're both within a point of each other there. And a beautiful pullback. Now, I do want to talk about one other kind of lesson here to think about and show you how I think in these type of situations. So again, we were expecting the market to continue to sell off, potentially go all the way back to the low of the day before, right? So as it's pulling back and we come down to reject off the first major roadmap level and VWAP here, it may have started to look like, hey, here we go. We're starting our stair step. We held the first major roadmap level before the market opened. We came down, we hold that next roadmap level. come down below that, and now we were coming up to the back end of the next roadmap level. And what do you have? Stair-step price action right down each roadmap level. So it should have looked to you at that point like, hey, maybe I nailed the high of the morning. This could very well begin to start the sell-off. And so let me look for another short. And the first opportunity here would have been this push right back up to the back end of the 2 moving averages. But what I want to show you is that wasn't really a great trade to take because nothing lined up there. First of all, the moving averages, yes, they just crossed over, but it wasn't like we got a crossover and they were starting to go and then they came all the way back up into it, right? It was kind of just as the crossover happened. We didn't have any type of bearish divergence as it peaked into this area. We had the previous swings in price, previous swings on RVI, and we pushed up into this area. It was a new high. It was a new high. So there was really no trigger to actually get short right there, right? However, I want to show you now a different example of that scenario. So as it eventually sells off here, and there's the tag of the 200 after you get a decent crossover, starts to come out, and then it comes up and you have that bearish divergence. So actually that would have been a little bit nicer, right? So I just want to show you the most aggressive thing after it started to fail right out of the open here off the first roadmap level in a bearish biased market. First opportunity is that tag, but we didn't have the trigger to take it. You could have blindly put the level there or the short there, but there was no actual pattern for me to short myself, okay? Now, I want to go to an example where we get the pattern, right? So here we get the sell-off again. Now we're rejecting off the next level, coming down, getting back through VWAP. We get our crossover, and there's your first tag. So that would have been a good play. Would have made you some decent money at the downside, hopefully taking profit at your first roadmap level in case it bounced, which it did. And then we had another beautiful example here where we inched up again, came right to basically to the next roadmap level, right? Came right back to that 37, failed just in front of it with a bearish divergence, by the way. So you can see this was a step up. Here's the first level, here's the hopeful, and then here's that next level 2 ticks in front, right? So it starts to fail out and comes right to the 200. Here is a much sexier type of setup. Not only were we not just right at the crossover, but we had an actual kind of move away. But when we came back to the 200 here, look what pattern we got from the 200. That is the pattern I want, right? And from there, beautiful short opportunity. Now, did this turn into a 30, 40, 50 point trade with two ticks of risk? No, it was a scalp, and beautiful teaching example right here. They come right to the FMA and come back up. So you got your scalp, hopefully. You got your 06 to your 98 maybe, which actually is way more than 5 points. Doesn't look like much when the ranges are so big here, but still a 5-point sell-off to your expected support. And then again, you missed out on your runners. But I'm just showing you here, great opportunities, limited risk, potential for these trades to go tens and hundreds of points from that area. But textbook price action, you should have been alerted here if you were sure that if they were going to hold that FMA and come back, always potential that they were going to rip right back through it. And that's what happened, only to go just a little higher. And then I think from there, the market continued to sell off. And then you can see here, guys, for the rest of the day, I've got to speed this up now so we can get to our pre-market planning. Then you can see here some great short opportunities on the way down, right there. By an hour after the open, we start to get the actual follow through. You can see still bounces basically at our roadmap level with a bullish divergence for the first big bounce. But then here we go, reject off the back end of the 200 roadmap level, reject off the 200, all bearish divergences when this was happening. Bounce off the next roadmap level to the tick, to reject off the back end of the 200 for all intents and purposes. Come down, get through the next roadmap level, hold it here with a bearish divergence for another pullback. Okay, so there was plenty of short opportunities here off the roadmap levels on the way down as we went into a confirmation of our bearish expectation. So we kept going, and then eventually, again, I did warn you about this too. If they sell off and we expect lower lows today, it might not be a straight line. They could make this messy, come back up, come back down, eventually get down there, but it might not be a straight line down, which we started getting after that little hiccup out of the open, right? Looked like it was almost going to be a straight line down to new lows, came down to the major low of the overnight session, and then popped up before coming down to the new low. Okay, so again, inside of all this, you can still see plenty of beautiful rotations around these roadmap levels for really low risk trade opportunities. And that's it, right? I'm going to have to speed this up. We got to get to our pre-market planning now. So then we get our reverse phase eventually, about 1:30 in the afternoon. Beautiful short off the back end of our roadmap level here. But then they hold basically the 200, and then that begins this really nice 100-point bounce at the end of the day or going into the afternoon there, right? And then end of day, we come back to Hopeful, get through it, test right back to that roadmap level, and then you can see beautiful, beautiful short opportunities here all through the end of the day. So that concludes the review and the lesson for this morning. Again, just in the last couple of minutes, news release brought us right to our major expected resistance, which is now leading our pullback. So let's go ahead and jump up to the higher time frames. We do have a couple minutes to see if there's anything new to say this morning.